Welcome back. Once again, I'd like to do a portfolio update, this time on Rolls-Royce. Now, I was looking at my portfolio today and I was looking at the rate return of money, and it's risen to over 322%. Now, in terms of my investments in total in the last year, it's risen to over 207%. But 322% for rate of return is absolutely incredible. That means I've made smart decision with the places I've choose to invest my money. And that's key. So with majority of the companies that I've invested so far, especially short term in the last few months, these are also the companies that I was previously invested in as well. But the key thing is that I sold at the right time. I waited until it fell down and I bought once again. Rolls-Royce was a bit new for me. This was the first time investing in Rolls-Royce, to be honest. But it is a company I've been keeping an eye on for quite a while. But I just wanted to make sure that my head was in the right place, that I wasn't just doing it out of emotions, but I actually did lengthy research in the company. Because while this company was falling, people were panicking. And I wanted to make sure that I'm not just investing in a company just because it's cheap. I want to invest in a company if it's actually doing well. And thankfully, Rolls-Royce was on its way to recovery. So around the same time I started investing is around the same time the price started to go up. I started investing in this company. So you can see I'm already up 49.95%, basically 50%. But I invest a small percentage in this company. Do I regret not investing more? Absolutely not. I do not regret, because I'm looking at this company long term. So I don't feel like I've made a loss in any way. I've gained knowledge, because a lot of this is just research for me, to be honest. Before I invest serious money into these companies, I have to find a lot of good companies. So what we want to take a look at is the Rolls-Royce 2023 half-year results. This is just the half year. It's not the full year. It's not even the fiscal year. It's just the half-year results. And it's incredible. This is going to give us a keen insight in what this company actually does. We know they make jet engines, but it's not just that. They're in other areas as well. And these are areas that are not well paid attention to, which is why I like to invest in companies like this. What does matter is to look at the financial metrics. It's improved in the first half of the year. It's exactly what we're looking for. The earnings before interest tax margin increased by 9.7%. That's what we like to see. The EBIT is increasing. How about their credit rating? Moody's Ba3, positive fixed BB, positive S&P BB, all positive in credit rating. Now, this is good for Rolls-Royce because companies like this like to get their hands on capital. And in order to do that, you got to take out loans, you got to take out debt. That's how you build up the infrastructure. If you want to invest in a new area in your business, that's how you do it. It's by taking out debt. It's by taking out loans. It's by taking out loans at extremely low interest, by the way. You don't pay tax on loans. Remember that. But what you do pay tax on is profit. So every time you make profit, you have to pay tax. So a company like this, whenever they make profit, if they reinvest it back into their company, they don't pay tax. They pay less tax on that because it's considered a reinvestment. Have you made capital gains, or have you been reinvesting your profits back into the company? That's not capital gains. Do not ask me how that works, because that will go into another conversation. Here's something that investors do like. By the way, this is just the first half of 2023. Something that investors do like is free cash flow, because investors like to have money back into their pocket. They like to know that their investments are actually doing well. That's one, but they can also earn something from that investment without withdrawing their actual investment. Free cash flow. Underlying operating profit. That's remarkable. Just for the first half of the year, over $500 million, 673 million. That's quite remarkable. Keep in mind, the first half of 2022, it was 125 million. 125 million in the first half of 2022. The first half of this year, they've tripled that, or 4x that or something. Now, the fiscal year of 2022, they made 652 million. That's an underlying operating profit. They've already made that in the first half of this year. But in recent years, they weren't doing particularly well. And they're on the stage of recovery, which is why I like companies like Watches of Switzerland and Rolls-Royce, because in recent years, they weren't doing particularly well, but they've recognized that and they've actually proven that, you know what, we can actually recover. We can actually improve our business, fix our underlying weaknesses. We can recognize that we made mistakes and we can correct them. I like companies like that because management like that can take criticism. Management like that can recognize they've made a mistake, they can correct it, and they can make investors happy once again, just as Rolls-Royce has done. Now, here's the kicker, if I'm being completely honest. The gross margin is 21.8%. That alone should tell you what's really going on in this company. First half of this year, the revenue 6.95 billion. That's in revenue. In 2022, the first half of the year, they've made 5.3 billion. This year, 6.95 billion. That's remarkable. So the organic change is 28% overall in the first half of the year. They've increased profits. They've increased the revenue by 28%. Here's even the larger kicker. They didn't do particularly well in the operating profit last year. In the first half of last year, they did 125 million. And that wasn't particularly well. But as you can see, they've taken that on board and they've increased it by over 673 million. It's exactly what we need. So it says here free cash flow is improved as a result of higher profits and strong growth in EFH receipts, partly offset by working capital outflow. Higher operating profits led by civil aerospace and defense. Power systems margins are expected to improve in the second half of 2023. Lower net debt reflects free cash flow improvements as we continue to drive towards an investment grade rating. They want an investment grade rating because they can get more investment that way. So let's look at the civil aerospace. This is what they're generating in the first half of 2023. 3.2 billion. Last year, the same time, they generated 2.3 billion. The organic change is 38%. So in terms of large engine operation inputs, so thankfully, Rolls-Royce has broken these data down really well. For civil aerospace, the large engines, that's grown up by 49%. Business aviation, 23%. Regional, 21%. And V25,000, 8%. But you can see the largest area that they've improved in percentage is large engines and business aviation. That's also their most profitable parts of their business. Now, how about the defense part of your business, which is one of the key reasons I wanted to invest in this company, because they are a manufacturer in the defense area, which is good. The defense industry is always profiting, sadly to say. So how about transport? 10% increase. Combat, 37% increase. Naval, 2%. Submarines, 14%. And others are 1%. How many of you knew that Rolls-Royce was involved in manufacturing submarines? That's remarkable. Not to mention the Navy, the naval defense manufacturing. You can see the first half of this year in terms of revenue, it's 1.9 billion. Last year was 1.6 billion. And in operating profit, it's 261 million. From last year, 189 million. So they've increased that by 33%. Now, to be honest, free cash flow is a little bit down on the defense side. It's 76 million, while last year was 89 million, but that's only the first half. Now, this is what I mean when I say this business is quite diversified. They're involved in power systems as well, and they've generated in revenue 1,774 million compared to last year. First half of last year was 1,371 million. That's a 24% change, 24% growth in revenue. In gross profit is 452 million for this year, first half. For the first half of last year, it was 401 million. That's an 8% growth once again. So in all areas, this company is recovering and growing. So let's break down the data. In marine, it is 0% increase. In industrial, a 17% increase. Power generation, 54% increase. And in defense, 22% increase. So they've stayed relatively stable on 0% in marine. But in almost every other area, they're absolutely blitzing it. They're absolutely destroying it. Trading cash flow is, however, a little bit lower than it was last year in the first half of last year. It's 22 million this year, 76 million last year. Something else that Rolls-Royce invests in is new markets. But there's a reason why it's called new market, because it's literally new. They're not even focused on generating profit as of yet. The revenue is incredibly small at the moment, is 1 million for both first half of this year and last year. In fact, if anything, what they look to be spending a lot on is 64 million on R&D expenditures. Now, there's a 32% in R&R electrical increase. And R&R SMR is 168%. What are SMRs? SMRs are small miniature reactors. This is something that will change the world. And Rolls-Royce is already investing in this research and development area. If you don't believe me, let's Google it together. Let's copy and search for SMR. What are SMR? Oh, there we have it. The Rolls-Royce popped up just right there. Small modular reactor. I said miniature, my mistake. Same thing, to be honest. Small modular reactors, they are power generators, but they're low cost, more efficient. They're new technology, new research, could be extremely profitable and extremely green for our environment because we're looking at generating greener energy. This will have a big difference in what the world does when it's looking towards changing to clean energy. And Rolls-Royce is doing investment in that. Let's check out this video really quick on just a quick explanation. Rolls-Royce small modular reactors.
Imported energy instability and a generation of nuclear power stations reaching the end of their operational lives. We must find a mix of energy that can provide power for generations to come while achieving our targets of reaching net zero by 2050. Rolls-Royce small modular reactors will play a vital role in meeting these challenges, working alongside large nuclear power stations and renewables to provide clean, affordable energy for all. Providing 470 megawatts of always-on, sustainable, affordable electricity. Enough to power 1 million homes without producing any emissions. Developed by a UK-based team building on decades of engineering, manufacturing, and nuclear reactor design experience. Using well-understood, proven reactor technology that has been safely and successfully deployed hundreds of times around the world. Our approach to deploying a fleet of SMRs is radically different. A 90% factory-built solution, drastically reducing project risk, shortening construction times, and increasing delivery certainty. Using standardized, commercially available and off-the-shelf components. Transported to site by road or rail and assembled on a compact footprint of around 12 acres, a tenth of the size of a large-scale nuclear power station. Rolls-Royce SMR is engaged in discussions with regional development companies from across the UK where the factories could be located, supporting the government's plans for levelling up. These factories will create high-value, sustainable jobs, manufacturing products that will be exported globally for many decades to come. Our power station is scalable, and as demand increases, we can invest in further factories, using the same design and management systems for all our SMRs. The UK has outlined its ambition of 24 gigawatts of nuclear energy by 2050. Rolls-Royce SMR, the UK's domestic nuclear energy champion, is ideally placed to help the country meet those ambitions. We've already targeted several sites in North Wales and West Cumbria, close to the sites of decommissioned nuclear power stations or existing nuclear sites. They offer existing grid connections, infrastructure, a highly skilled workforce, and a supportive, engaged community. Working with the government and the nuclear decommissioning of export to operate. The generic design assessment process is also now underway with the nuclear industry regulators, the most significant step so far in securing consent for the design to operate in the UK. This is a world-class global product for a global market. We are involved in supporting international efforts to decarbonise energy networks and industries with potential for £250 billion of exports. Memorandums of understanding are already in place with Estonia, Turkey and the Czech Republic. And we are in discussions with many more countries who see the Rolls-Royce SMR as a way to energy security and achieving net zero. Our development programme is fully funded with £490 million made up of commercial equity from around the globe and UK government grant funding from UK research and innovation. Our investors are Rolls-Royce Group, Constellation Energy Corp, which operates the largest US fleet of nuclear plants, BNF Resources UK Limited, and Qatar Investment Authority. our Rolls-Royce SMR. Our technology is powering solutions to our global energy.
There you have it. An explanation by Rolls-Royce on small modular reactors. And it's not just Rolls-Royce. Other companies are also engaging in this sort of research and in development and manufacturing and installation and operation in various countries. This is starting to take to the world quite rapidly, and it's one of those areas that people are not paying enough attention to because it seems complicated, but it's not complicated. It's actually very simple. And there's a reason why they don't put nuclear in that word, because they want to explain to you in a simple way that it's a low risk way of generating energy. But if you read deeper into it, you'll realize nuclear energy is the most powerful source of always on clean energy. However, it must be deliverable, scalable, cost competitive to be widely embraced. Rolls-Royce SMR Ltd has designed a factory built nuclear power plant that will offer clean, affordable energy for all. So it is nuclear, but they're not going to put that in the title because people panic every time they hear nuclear. In reality, I can't tell the last time I heard about a nuclear power station blowing up, or a nuclear submarine blowing up, or anything nuclear blowing up. But they want to approach this in a safer way, a more consumer-friendly way, which is smart because if they're a publicly facing business, they have to approach it in such a way that it's going to meet regulation. And without that, they'll be nowhere. But you can see it's looking good. Based on the investors that are investing in this company are not just any investors. Their investors were also in the area of energy, which is really key. They all got a common interest, which means that they all want this to work. And Rolls-Royce is willing to offer this technology to other countries, not just the UK. So don't count on this just being, okay, the UK. No. Rolls-Royce is willing to operate in other countries as well, which means that this investment just went from good to incredible. Thank you for watching. Hope you've enjoyed this video on my explanation and just, taking a further look into Rolls-Royce, the numbers, which can be a little bit boring, but I think the largest takeaway from this business is that Rolls-Royce is incredibly diverse as a business, and they're looking to increase their reliance on new technologies such as SMRs. Thanks for watching, and I'll see you in the next one. Peace.